I wonder, Jack, from your standpoint over at JPMorgan, whether you do agree that there is going to be a trough further out in the distance before we get to that capitulation, after which perhaps you could get a more sustainable rally, but we're not there yet.
Yeah, I mean, I would certainly agree that the credit fundamentals don't really line up with what reality is showing us. I guess on the equity side of things, the silver lining here, the good news here, if you want to be sort of optimistic about it, glass half full, is that, well, a lot of what's happened this year, in fact, basically everything that's happened this year, has been driven by multiple compression. So the good news going into 2023 from an equity market perspective is that stocks aren't expensive anymore, at least not in the way that they were at the start of the year. The problem, of course, is that earnings shoe has not really dropped yet, and the big question right now is just how bad are earnings going to be as we move through 2023. I don't think anybody is expecting good news from an earnings perspective. It's really just a question of how bad it actually is. But from that valuation perspective, from the multiple perspective, Lisa, that is at least one thing that's keeping me modestly optimistic about short-term equity performance potential.
And this sort of tension right now between valuations being low but potential outlooks deteriorating has been highlighted by a lot of Wall Street research, including Morgan Stanley's Mike Wilson, who just wrote, quote, "We still expect higher highs for this tactical rally." So that's the positive. Before the deteriorating fundamentals, that's the negative. Take us to lower bear market lows next year. How much, Jack, have we already seen, though, some of that disappointment bled into this last quarter's results? Because there were a lot of disappointments, and they were severely punished by the market action.
This whole year has been a disappointment. I mean, it's been an extraordinarily challenging year to be a strategist and try to figure out where things are going over the short or medium term, because at every turn, you are being challenged by something new. I mean, I could see another 5–10% lower on this equity market. I'm not particularly optimistic about this current rally. I don't really think it has legs. I don't think it has a whole lot to stand on. But I do like that valuation story, Lisa. I don't want to, beat a dead horse here, but markets are off so much from where they were in January that I think if you extend your time horizon by more than 12 months and look out over 18, 24 months and beyond, the story starts to get a lot more interesting, because 2023 may not be a great year for earnings, but 2024 probably will be a pretty decent one. And if we can get over this trouble, if the recession that is coming ends up being shorter or at least shallow in nature, I think we can look beyond the short-term chop and focus in on that longer-term story.